5 trading sessions have been won by the bears, but one of the most influential voices on emerging markets has given India his vote of confidence. Mark Mobius of Templeton Emerging Market Group says India is still in a bull market and the recent correction is an opportunity to buy stocks at reasonable prices.
We are still in a bull market in India, and these corrections are corrections, not necessarily entering into a bear market. So I would say this provides some opportunity to buy stocks at a reasonably priced. On a comparative basis, India is not that expensive, and for that reason we're looking more closely at not necessarily the large names which have run up a lot, but some of the smaller companies that are attractively priced. If you look at the global picture, 16, 17 times is not excessive. It's higher than what you see in China.
India in general and the IT sector in particular have got a thumbs up from Mobius. He believes that despite earnings disappointment, Indian IT companies are still good long-term bets.
It is still a good long-term investment because India has made tremendous strides in the outsourcing arena, and they've gone from simple outsourcing to more complex consulting and technical work. As I travel around the world, I find these companies working in every field in almost every country. So I think there's something there that will last for a long time. So we want to be exposed to that sector in India. Of course, from year to year there'll be corrections in terms of earnings, but from a longer-term perspective, they're in a very sweet spot.
As the economy starts to pick up, Mobius says that the emphasis would be on picking the right stocks in the consumer space where valuations are reasonable.
The emphasis would now be more on consumer, because per capita income in India is moving up. People are getting money for disposable kinds of items that you can buy, and I think that's where the action is going to be going forward. The challenge, of course, is to find those companies that represent the sector that are reasonably priced. As you know, Hindustan Lever is off the map in terms of valuation. It's a great company, but it's very, very expensive. So we've got to find others that will be more reasonably priced.
While the recent correction has unnerved many investors, Mobius is not perturbed. He feels a 20% correction is not unusual and further downside will be limited.
I think it's not going to be that much more. There may be another 5 or 10% at most. You must remember, in this day and age, volatility is tremendous. 20% these days nothing. It's a correction. Whereas in the past, 20% used to create panic. Now it's sort of very usual that you get the kind of correction in a rapid bull market that we've seen. So I think you will see corrections, but it won't be that significant. I would say anywhere between 12 to 15% annualized. That would be a reasonable expectation.
While the long-term India story is intact, in the short term the earnings disappointment, political uncertainty and tax-related concerns will weigh on investor sentiment. In Mumbai with Nimesh Shah, Arvind